Dear great, awesome friends, audience, partners, crying traders, non-crying traders, connoisseurs of travesty circus happening not only in Washington and many other places in the world. Welcome in our next episode of our podcast. As you know, we don't know much, Dan and me, and sometimes we need helping hand. This time we invited a great guy, Jacob Kirkegaard, originally from Denmark, now residing between Washington DC and Brussels, Belgium, to talk about world economic outlook. We are a few weeks after so-called Liberation Day, pronounced by President Donald J. Trump. We are just after 100 days of Trump presidency, and world is upside down, is one big roller coaster with one sign on the wall named Trump. These 5 letters are everywhere, and the global economic outlook is very much influenced by him and his volatile, peculiar, crazy right. That's why we invited Jacob as an economist, strategist, macro guy to help us to fight with this wheel of ignorance and chaos, and tell us how he thinks this Liberation Tariff Day will develop more. Jacob originally is from Denmark, as I already said. He served in Danish military, Danish Ministry of Defense. He also lived and worked for United Nations in Iraq. He studied in many places, getting a PhD from Johns Hopkins School of Advanced International Studies. Now, as I said, he is between Washington and DC, covering macro economy, strategy, and more. So, Jacob, great having you and welcome. By the way, you see that we are trying to create podcast even though we are constantly traveling, so I'm sending all the best from Western European highways, and I'm now shooting ball to my co-creator Dan, who is safely in Southern Bohemia as always. Dan, the story is yours.
Okay, so hello Jacob. You are from Brussels, so there's many greetings to Brussels. And my first question is if you are entertained from the current situation, especially what the Trump administration is doing to the world.
Well, look, I mean, I remember, Trump's first term, right? The first thing you had to do when you woke up every morning was to check, what did Trump say now? And we're kind of back to that again. You never know quite what happens, and I suppose there is some, attraction to or to sort of the unforeseen, unpredictable. But I also have to say that in the second term of the Trump administration, Trump's action seems to be more radical. I mean, when you conduct American trade policy by tweet, on a daily basis, the implications for business predictability and markets, et cetera, are very profound. So, yes, I'm entertained, but I'm also almost exhausted. And it's only 3 months in, right? So.
Yeah, it seems to be he is there for 3 years, not 3 months. I agree completely. And now, maybe the first question, which is a little bit more serious, before we dive deep into maybe some numbers or the whole picture. So how would you sum up the first 100 days of Donald Trump, number one, in the office?
I think I would sum it up in just one word, revolution. Quite frankly, if you look at the measures Trump has taken, he has raised American tariffs to the highest level since the early 20th century. He has essentially imposed or declared a bilateral trade embargo on China. He has so far ignored a Supreme Court ruling on deportations. And he is about to, push through, help push through another major tax cut through Congress. And as a result, we've had something we haven't had maybe ever. We've had days where U.S. interest rate goes up and the stock market goes down and the dollar goes down, right? I mean, you've had days when the U.S. traded like an emerging market. To me, there's only really one word for that, and that is revolution, for good or bad.
By the way, you have mentioned some fiscal measures. These are not, in my opinion at least, very much discussed in the media, but only on the sideline. So what do you mean about it? Should it be the most important part of the MAGA policy, or is it only a accompanying part of the whole picture?
Well, I think to the extent that MAGA sort of represents a coherent economic policy platform, which, by the way, I don't think is the case, tax cuts is obviously a very important part of it. Tax cuts has been, if you like, probably about the only thing that could unite the Republican Party for the last 30 years. And as such, from a political point of view, it's absolutely critical for Donald Trump that these tax cuts pass Congress. Because if they don't, U.S. growth is going to be a lot worse than currently predicted, because what we're facing is the end of many of Donald Trump's tax cuts from 2017. So actually a significant tax increase. But I will also say that, when I look at the U.S. macroeconomic picture, you go back 30 years when the current tax cuts started, under the first Bush administration, or Alan Greenspan, et cetera. I mean, there was a time when we were worried that there would be no treasury debt, that the treasury market would dry up. And, the U.S. Total debt to GDP was, close to 30%. Growth was high. So yes, I think at that point in time there was a good point for tax cuts. But since it has just never stopped. And now the U.S. is not a low debt country. The U.S. is a high debt country. And it is a very high deficit country. I mean, it is extraordinary when you have a country that is at basically full employment and the deficit is somewhere between 6 and 7% of GDP. And I would also say that, for the last 25 years, the U.S. has been blessed by positive economic shocks. The shale oil revolution made America self-sufficient in oil and gas. Obviously, the technology revolution, where the U.S. is also leading. But there's no guarantee that continues. And there is a scenario where the U.S. continues to have very high and rising debt, very high deficits, but slowing growth. Aging alone, demographic, will slow growth. But when I see Donald Trump, and Elon Musk and the Doge guys cut public support for R&D and other measures, I have to worry that the long-term implications for potential growth in the United States, right? So there's a real risk that unless the fiscal issue, and by that I mean the revenue side, unless the America finds a way to raise more revenues one way or another, I think there is a risk that the United States begins to look more like Italy. And what that means is it's a high debt country with a relatively low growth rate, and therefore always, if you like, fiscally at risk. So Congress has to act. Unfortunately, I think this Congress and Trump is going to make it worse.
So do you think that it's impossible to balance the federal budget by lowering expenditures? Am I right?
No, you can always do that. And I would certainly argue that maybe cutting part of the defense budget might not be a crazy idea. Politically, of course, it will not happen because of the competition with China. But, the reality is that an aging population, we know that from every country in the world, an aging population and some sort of variation of a social welfare state, where the government is involved in the provision of old age pensions and health care, which is also the case in the United States. That means that expenditures go up, right? And it's fundamentally about aligning. What do you expect from your government? If you expect to have some sort of old age provision, some kind of healthcare provision, you also expect the government to play a role in education, probably basic infrastructure. In the case of the United States, obviously defense. You cannot, in my opinion, finance that on average by raising only 15 or 16% of GDP in taxes. It simply won't work. And, the Republican argument for the last 30 years, to sort of trickle down economics that, if you just cut the taxes for the rich, they will create growth and jobs. It doesn't work. Tax cuts are not self-financing. So Republicans have been lying about this for decades. The Laffer curve is largely an illusion, in my opinion. At the same time, I would also argue that the Democrats they're also hypocrites, because many Democrats want a social welfare state in the United States, similar to what we have in many European countries, except that they only want to tax the 1%, the 1% richest Americans, to pay for it. And everyone that lives in Europe knows that doesn't work, right? A welfare state, broadly speaking, means that the top 90% pays for the bottom 90%. That's how it works. So the distance between what Democrats want and what they're willing to tax is enormous. So no, I mean, you cannot solve America's problem unless you fundamentally agree to raise more revenue. I don't think there's any way for that. You have to raise taxes. It's as simple as that.
Okay, so do you think that under the current situation and the political scene in the United States, this problem, in fact, and it sounds at least what you tell us, is in fact not soluble, because no party has a real solution to this problem. Is it right?
Yeah, no, I agree. I mean, if you go back in history, in American fiscal history, you've had a number of commissions, typically bipartisan commissions established by Congress. The last successful one was in the late 1980s, that led to both the tax increases by George Herbert Walker Bush, the first Bush, in the early 1990s, and again by Bill Clinton, the first Clinton term. So there is a history that you've actually been able to come to bipartisan compromises on fiscal that led to higher taxes. But it hasn't been the case for 30 years. And there's nothing, unfortunately, in the current Republican Party that suggests that they're about to, wake up to reality. So I'm unfortunately somewhat concerned that, what we saw in early April during the big market volatility there, it's a little difficult because you had, on the one hand, Trump announcing all his tariffs, but on the other hand, you also had movement in Congress towards approving more tax cuts, literally on the same or the following day. So it's a little unclear what markets were reacting to. But I think, unfortunately, as we move forward, as I said, the United States is going to become more fiscally vulnerable. And what I mean by that is not that America is bankrupt or Greece or something like that. What I mean by that is that, remember what happened in 2022 in the UK when Liz Truss came in and became prime minister, and she announced this extra new budget with a lot of unfinanced tax cuts. Well, markets didn't like that. In fact, there was a mini run on the pound. UK interest rates spiked. And then, of course, it didn't take long for her to, be ushered out and replaced. I think a situation like that becomes more likely in the United States. So what happens is that you have Congress do another irresponsible thing on fiscal tax cuts. Markets will react, going forward, I believe, and then that is the trigger. It's simply market pressure. That will be the trigger, not to get rid of the president or get rid of Congress or new elections. That's not how the U.S. political system works. But, that is the time when I believe you're going to have to return to a more sustainable fiscal policy. But unfortunately, I think it takes a financial market reaction first.
So this is a perfect link to my next question, because when we look at the yield curve on US Treasuries yield curve, we can see that it's partially inverted. So so the yields are lower in the in 2 year treasuries, but much higher on 10-year and longer maturities. So what is your interpretation of this kind of very weird, in fact, yield curve? How can it end up?
Well, I mean, my interpretation is that the short-term uncertainty, about Fed policy is very high, right? Will they, in fact, we know we're going to have, or under the assumption that Donald Trump continues with with the vast majority of his tariffs, inflation is going to go up. We know that. That would, of course, dictate that the Federal Reserve probably would not cut rates, or certainly would maybe even increase them. On the other hand, if you believe that, unfortunately, I am increasingly of the opinion that there is a real risk that the Federal Reserve may have to respond to a U.S. recession later this year. Well, normally you would say, well, the Fed has to cut rates, right? But the problem is, if it cuts rates in the middle of rising inflation, that's not great for credibility. So what I think you're looking at here is a yield curve that, in the short run, prices in a significant risk of stagflation. But clearly, in the longer run, in my opinion, very clearly signals that there is a fiscal problem in the United States, and that it is risky, quote unquote, to lend to the Treasury for 10 years or 30 years or whatever. Because over a 10-year time horizon, yes, I certainly believe that America has a real fiscal challenge.
So considering what you have just told us, how do you assess the development of the US economy in the first quarter? Is it possible to draw any conclusion from this for the future, and not only maybe for the next several quarters, but for several years? Is it possible?
I mean, I would certainly say that all the hard data, including, of course, both the labor market and the latest GDP numbers, suggests to me that whatever happened, nothing has happened to the real economy yet. Even though the tariffs have now been implemented, but they haven't really affected the availability of imported goods yet. The shortages are yet to emerge, and we know the data that the container ships aren't docking, quote unquote. So we know there are going to be shortages. And then, I also think that, the rebound in markets, I think at some level probably has something to do with Trump finally coming out in the open and saying he's not going to fire Jay Powell. So probably the next Fed president will be, someone who is not crazy, quite frankly. We can have a long discussion about who it might be. I'm not going to, weigh into that, but I'll just say that I do think markets are pricing in that the Fed will be okay, if I can put it that way. I think markets probably are also pricing in that there will be some trade deals between Trump and some major trading partners, Japan, South Korea, and others, maybe even the European Union. On the other hand, I think the market might be overly optimistic. I don't think the probability of major trade deals are really that likely, because I don't think major economies have much to offer, or will be willing to offer Donald Trump very much, simply to withdraw tariffs that he has put in himself. Obviously, there are national security considerations in Japan and South Korea, etc. But overall, I'm quite skeptical that those. So I think their markets are probably are too optimistic. And I fundamentally, as I said, I think for the first quarter, so far so good. But the full real economy impact of the tariffs, especially, are yet to be felt. And I continue to believe that effect on the average consumer will be highly negative.
I read your or Peterson Institute prediction for the coming quarters, and you predict or expect that the worst quarter in the United States will be the third quarter. Is it right?
Yes, that's correct.
And I would like to know what specific development scenario did you work with in this prediction?
Well, that scenario is predicated on the Trump tariffs coming into force. It's also predicated. I mean, obviously they have come into force, but they're also predicated on. It's reflecting the skepticism that I just talked about regarding the prospects for, if you like, meaningful trade deals with major trading partners, including China, by the way. So it basically is a, if you like, macroeconomic modeling that tries to include the effects of the restrictions in trade, the tariffs, but also possible shortages developing in the U.S. economy. And the associated, I think that's also what we're seeing, the associated standstill in business investment, the associated increase also in things like residential housing. It's just going to be a lot more expensive to build houses in the United States when lumber from Canada is a lot more expensive. Air conditioning units from China are a hell of a lot more expensive. Sorry for my language. And all of these things are going to weigh on economic activity. And as I said, we think the economy is likely to bottom out or have the worst quarter in the third. Then at the margin, again, we debate this a lot internally. We think at that point the Federal Reserve might be inclined to respond, aka cut rates, but not a lot. And we also believe that Donald Trump, because of this slowdown in the economy, will be compelled to withdraw quite a number of his tariffs, which, by the way, he has, of course, already been doing, especially vis-a-vis China, where more and more product categories are being, exempt from tariffs. So basically, it's an attempt macroeconomically modeling, what is an extraordinarily uncertain situation. So I wouldn't. I'll be honest. I wouldn't put a lot of credibility in this forecast. The confidence interval is very, very large.
Okay, so do you think that all the problems with tariffs will be solved? Solved, like, I mean, the trade deals will be concluded within this year. Do you think this is the most probable thing, or do you think it's not very probable, especially when we look at the relationships with China and the reluctance of China to deal at all?
Yeah, no, I believe the probability of meaningful trade deals. I'm not saying that Trump doesn't declare victory. He did that with Canada and Mexico, and he just basically rolls them back. That can always happen, and I would indeed predict that is quite likely, because I believe the U.S. economy will slow down. And Trump will feel the need to do something about that. I mean, he may talk about how Americans should not have, they should just get used to having more expensive stuff. But he got elected on promising to reduce inflation, and getting more, it's not going to work. So I think he'll be forced to, unilaterally retract a lot of these tariffs. But this will only be after the negative economic impact is felt. And therefore, because I don't believe that China, first of all, is going to be willing to be very concessionary vis-a-vis the United States. Now we have a situation where both the United States and China have exempted some categories of goods. Obviously, those categories that are the most directly affect the economy, and in which shortages would be most likely to develop. But ultimately, I think in China, these tariffs, and especially Trump's, when he went and added another 50% onto the Chinese retaliation, that was viewed, in my opinion, in China as a sort of geopolitical attack on the Chinese economy. Basically a reflection of America's desire to, hold back China, contain China. And that obviously is unacceptable to the Chinese government. And I also think the Chinese government has prepared for this situation, quite unlike the US government, obviously. So I don't think China is going to back down. And we're now in this weird situation where, at least publicly, Trump says, oh, we're negotiating with China. And then the Chinese Ministry of Foreign Affairs goes on and said, no, there's nothing going on. And, Donald Trump and Secretary of the Treasury Bessent says, oh, Xi Jinping should call us. And the Chinese aren't going to call them, right? They never call. I mean, so we're in this standoff. So I'm very skeptical about that. With regards to other major trading partners, let's say Japan, for instance, I am very skeptical that a real deal can be had, because it will not be acceptable to Japan, for instance, to cut a deal that leaves in place, 25% tariffs on cars, or even the 10% across the board. And in return for what, right? Japan, which has an election to the upper house in July, they're not going to do much on releasing, the very high Japanese tariffs or quotas on agricultural goods, rice, etc. And often it seems like Trump is just being irrational or delusional about trade with Japan. I mean, the reality is that the majority of cars built in the United States are pickup trucks. Well, anybody who's ever been to Japan knows that big, large pickup trucks does not work. on Japanese roads and in Japanese cities. So there's nothing really that, and by the way, of course, Japan drives on the other side of the road, right? So this idea that the unwillingness to buy American cars reflects a tariff is just nonsense. So there's not really much that Japan can offer. And also remember, Trump doesn't have what's called trade promotion authority. So he cannot actually offer to lower American tariffs very much. He can only offer to take away those tariffs that he himself put in place. But the problem is he has no credibility, right? If he took them away, put them on, took them away, put them on with Canada and Mexico. He has no credibility, right? So why should Japan offer him concrete measures in return for something that he can offer in which nobody believes him or don't think it's credible? And the situation, by the way, is the same with the European Union, right? What can the European Union offer Trump? Obviously, yes, we can buy more LNG, fine. We can do that, but only going forward because we need to build more export terminals in the US first. Europe can buy more weapons in the United States. Yes, we can, and we might want to do that and send them to Ukraine. But on the trade side, look, we're not going to be buying American pickup trucks. It's just not going to happen. Because again, it doesn't work on European infrastructure, and obviously also with European gas prices, it just doesn't work. And so the European Union offer, for instance, of 0 for 0, basically telling Trump, "Oh, you don't like tariffs? Fine, let's go to 0. If you go to 0, we go to 0." The problem is Trump cannot offer that because he doesn't have trade promotion authority. So ultimately, therefore, I'm very skeptical that Trump can sign meaningful trade deals with anybody. He might get a deal with, maybe Vietnam, okay, or maybe some other small economy, but a serious big economy, no. Definitely not China. And he'll be forced to gradually retract from many of these tariffs as the full effect is felt on the US economy.
Yeah, as I know that China or Chinese Communist Party has a problem that the party doesn't know with whom to deal or to negotiate and about what to negotiate, because in the White House there are basically minimally two camps, and one camp is strongly protectionists that would like to completely decouple from China, and then there is the camp led especially by Scott Bessent that is more open to negotiate. But the key problem is that China doesn't know what is the goal of the U.S. administration. Do you at least have any imagination what could be the real goal of the U.S. administration? Because I suppose that United States really wants to suppress China, and maybe this is the long-term goal. What is your opinion?
There's no doubt, in my opinion, that there are significant parts of the American foreign policy elite. This isn't just Republicans. This is also Democrats. It wasn't like, Jake Sullivan or the top part of the Biden administration weren't more or less explicitly trying to contain China's at least technological advancement. So there's no doubt that this is part of the goal here for some of these people. I don't think there's any doubt about that. And that, of course, makes it very difficult to negotiate, because this is something that will never be acceptable to China. There's also, when you hear Donald Trump and especially some members of Congress saying, "Oh, we need these tariffs because we need the revenue so that we can pay for more tax cuts." Well, okay, if that's the case, then why do you think then we coming to negotiate tariffs with you know you're not serious about giving it up because you need the revenue, right? And then, but I think unfortunately, so depending on who you ask, you'll get different answers. But actually, I think the biggest problem with this is that President Trump himself, who is ultimately the only person that really decides anything in this administration, he has a completely misguided and wrong idea about what tariffs and trade deficits are, right? He actually believes that if America has a trade deficit of, I don't know, 200 billion with China, that America loses 200 billion, right? Rather than paying for goods and services from China that American consumers want. So, so when you look at the way the reciprocal tariffs were initially designed, right? The way they were designed was to bring all bilateral trade deficits to zero. I mean, which is just economically illiterate. And I think the problem is that when other countries come to negotiate with this administration, whoever they negotiate with, and I agree with you that Scott Bessent, who appears currently to be, in the ascendancy, we don't hear much from Peter Navarro or even Howard Lutnick or some of the more protectionist advisors. It's mostly Scott Bessent that speaks. But even Bessent, he has to reflect this irrational view of tariffs that Trump has. And again, if you come as a foreign negotiating partner, how do you address that? I mean, if Trump thinks that the trade surplus you have with America, maybe, means that you are, quote unquote, screwing America, rather than you sending goods or services to the United States and are being paid in IOUs, what do you do? So no, I mean this. I know, having spoken to a number of European Commission officials that goes to Washington to try to talk to the administration. It's never they don't know what the ask is, because this administration doesn't know what it wants. And then I think there's also one other thing that shouldn't be underestimated in this, which is that all the relevant departments are incredibly understaffed, right? You look at the Treasury Department, there's only Scott Bessent. There are no undersecretaries for domestic or international finance. If you look at USTR, there's only Jameson Greer. He has like a skeleton crew negotiating or working for him. And he's supposed to negotiate, 50 or 70 deals in a few months. It's complete nonsense. So again, this administration doesn't know what it wants. I think, unfortunately, predominantly because the president himself personally doesn't understand trade.
So when we focus now for this to the strategy to suppress China, do you think that it really works? Because when we look at the China's development, especially in the 2 or 3 last years, and its transformation towards more technologically improved sectors, especially semiconductors, of course, and I don't know, robotics and so on. So do you think it doesn't have a completely different result?
No, I mean, I think, no, I mean, it will not work, is the long and the short of it, in my opinion. China today is sufficiently large and sufficiently technologically advanced that if it is cut off from US technology, it will, over time, develop self-sufficiency in many of these technologies. And I think that's what we have seen in the last couple of years as a response to, Jake Sullivan's, small garden, high fence technology restrictions. So from that point of view, an American policy explicitly designed to hold back China's technological development, I don't think will work. But I would also say that, I look at other aspects of the Chinese economy, and I see that here is a country that is facing a decline in the population 3 times as fast as what Japan went through in the 1990s. I see a country where the vast majority of household wealth is still tied up in the housing market. And that's a really toxic combination, right? Because when the population declines as much as it does in China, yes, you can design a policy that tries to continue to move people to tier 1 or even tier 2 cities, so you can quote unquote rescue those housing markets. But that is at the expense of the rest of the country. And therefore, I have a fairly bearish view on China's long-term macroeconomic or potential growth rate because of this. And there doesn't seem to be a particular desire by the Communist Party or Xi Jinping to try to shift the economy away from investment and a policy of investment subsidies towards more consumption. And unless you do that, all China has to rely on going forward is ever more exports. But that's not going to work, in my opinion, in the long run, because it's not just going to be the United States. It's going to be the EU. It's going to be the neighboring countries, ASEAN, Japan, Korea. Everybody is going to be reluctant to accept ever more Chinese exports. So, unfortunately, you could argue that I don't even think that the Trump administration or America needs to try to hold back Chinese growth, because the current Chinese growth model isn't going to work and is eventually going to run out of steam. And in fact, I would argue that what Trump has done with these tariffs is essentially giving Xi Jinping an excuse. It's going to be a little bit like Fidel Castro, right? Who for 50 years could always say, no matter how bad things gotten in Cuba, oh, it's because of the American embargo. It has nothing to do with my economic system. Well, now Xi Jinping can say whatever goes wrong in China, oh, it's America's tariffs. It has nothing to do with my unwillingness to shift the economic model away from an investment subsidy model that just doesn't work anymore. So,
yeah, exactly. This is a great point, because I can see it in China. The Chinese party uses this as an argument just now, even. So that's completely right. So I suppose that you don't think that the China will be able to become the largest economy in the world in the coming future. Is it right?
no, I don't think so.
Yeah.
I think and the reason I think, let me paraphrase that. China is already in a number of sectors by far the largest economy in the world. Everything that has to do with energy, it's the largest car market in the world. Obviously, a lot of other, including very advanced sectors, right? China is the biggest market for industrial robots by a very, very large margin, and has been so for many years. So I think in that sense, China will certainly continue, I should say, to dominate certain sectors, including very, very high-tech ones. I mean, electric vehicles, batteries, solar, we can go down the list, right? But as an overall size of the economy, as an overall size of GDP, where it is not enough, quote unquote, to have even a significant number of very competitive, very technologically advanced sectors. This is far more dictated by longer term issues such as total factor productivity and, of course, population. And on those factors, China is not doing very well. In fact, the population outlook in China is a disaster in the making. And I unfortunately believe that the prospects for China to reverse its long-term decline in fertility is very low. And the reason for that is a combination of things. It's not possible to have children out of wedlock in China, for instance. That means that women tend to have children very late in life. And that means that they either don't have children or have only one, even though there's no one-child policy. It also has to do with the urban model of China. It's incredibly dense. I mean, if you go to Shanghai or any major city in China, it's very, very dense. This is not an infrastructure that is very well designed to have more than one child. Having 2 or 3 children in such an urban design is essentially not impossible, but you have to be very, very rich to afford that. So that also pushes against it, especially if we think that this is the growth model that China want. They want to build more Shenzhens or more Shanghais, etc. in the tier 2 cities. It's going to be a disaster for fertility, or a continued disaster. And then, of course, because China's population is so big, China can't do anything with migration. It's not going to make any difference, really. So population-wise, I'm very skeptical. And then there is total factor productivity. The problem with total factor productivity is, again, yes, China's EV industry and others are undoubtedly the most efficient EV industries in the world, but they are not the whole economy. And China is now at a stage where it's very impressive. And as a visitor, it's fantastic to visit China because you can take high-speed rail everywhere. But is the return on investment in China, even in high-speed rail, adequate to expect, to take the cost? I mean, if you take the incremental capital output ratio, right, is in China what, 6? So you got to invest 6 renminbi to get 1 extra renminbi of lasting GDP. Well, that model basically creates leverage. It is a debt machine. It only works with higher debt. And it doesn't necessarily generate, for that reason, higher levels of productivity. So from that perspective, as I said, I think China will continue to dominate specific sectors, but macroeconomically, China will stagnate and likely go into decline. I think China will be lucky to have an economic trajectory going forward like Japan has after the 1990s. I think it could be worse.
So, by the way, this is this is the result of the extensive investment growth model based on large infrastructure projects like high-speed rails and, of course, real estate in general. So, and the result was the total factor productivity declining in time. We can see it on the chart, very nice. And I suppose that Communist Party knows that, and therefore it tried to make a change toward higher value sectors. Yeah, so this is now the transformation ongoing and within the Chinese economy, that they are trying to make a change. And now we will look, you are bearish, I'm more optimistic maybe that it can have some results, but generally I agree. China can be very good in some sectors, but in general, and we can see it on the gaps, when we see the gap in nominal GDP and GDP per capita in purchasing power parity, the gap is too wide and China is unable to close it. So I agree with that. And what I would like to ask, maybe last question, because we are 47 minutes long. What do you think would have to happen for relations between United States and China to improve again in the future? Would it be regime change in China or something completely different?
You know, I actually think that the most important thing that needs to happen is that the United States, and by that I mean Republicans and Democrats, they need to stop being afraid of China. Because I think, you know, and I speak as someone who lived in Washington for over 20 years, and I cannot tell you the amount of times that I tried to explain to American policymakers, particularly including in the intelligence services, etc., exactly the bearish outlook that I just spoke about for China. You know, if you take that view, which again, I hold that view very strongly, if you're the United States, you don't have to be afraid of China. You can want, and I think that's legitimate, there may be some technologies that you can use for surveillance or other things that you don't want to share with China. That's fine. I don't have any issue with that. That's a broader political, ethical, whatever discussion. You may not want to buy stuff that was produced in Xinjiang, for instance, or those types of things. But that's very different from being fundamentally afraid of China, and that China one day will, you know, become number one, rather and upset America's position as number one. When that happens, I think you will see a much more rational relationship initiated by the United States with China. At that point in time, and I suspect we're not that far from it, actually. Because again, I think it will become clear to the United States that, you know, the Trump administration, that this highly confrontational trade war stuff isn't going to work. That is not the way you, quote unquote, deal with China. In fact, you are going to end up hurting yourself by doing so. But I do think that over time it will become clear, even in the United States, that yes, China will dominate certain sectors. But you know, there's obviously many sectors that the U.S. dominate globally and could continue to do so, especially if they didn't wage trade wars against the rest of the world. You know, so that it will become clear, I think, that this sort of infatuation in many parts of the United States, especially also in the Trump administration, you know, when they hear, oh, we want to reindustrialize America. We want to take back some of these jobs from China. We want to build iPhones and T-shirts and whatever. And you go like, what are you talking about? Right? I mean, it makes no sense economically, right? So, no, I think, you know, the Chinese Communist Party is what it is. I don't think, I'm not going to speculate about regime change in China or whatever. Obviously, if that happened, it would be undoubtedly not clear which way it would go, right? It's not clear that you would break, you know, liberal democracy would break up in China, or even that China would stay united. I mean, I'm not, I don't have anything to say to that. But as I said, I think the most important thing for this relationship to change is fundamentally that the United States realizes that China isn't the broad threat to it that it thinks it is. And yeah, we can talk about specific threats to Taiwan and you know, China's blue water navy and all of these types of things. But fundamentally, no, China is never, in my opinion, going to be the biggest economy in the world, unless at least the United States does something truly stupid with their economic policy, which is possible, you know, but not likely. And I think that'll be the biggest factor.
Okay, that was a perfect and maybe optimistic even conclusion from Jacob. Thank you very much for being with us today. I enjoyed it very much. So thank you, and I hope we will see you again.
My pleasure. Look forward to coming back in the future.
Okay, thank you very much. Goodbye.
Bye-bye.